try to turn that into a business tax deduction. That's not how the system works. We want to make sure that we teach you guys the strategies and how to use them legally, ethically, and morally, so that in the event that you were audited for some reason, you have documented proof to show that you have a legitimate claim to take that specific tax deduction. Good morning and welcome to today's Financial Health Traffic Report. I'm your host, Cortez, the financial health mentor to the working class, bringing practical, proven wealth creation strategies to hardworking men and women all across this country. As usual, if you're watching this on YouTube, don't forget to subscribe to the YouTube channel. If you're watching this on Facebook, then like and share it. Leave us a comment, put it on your wall. Let's get this information out to the people who can use it the most. Today's topic, we're going to keep on with the series that we started a couple days ago, and that is the top 5 home-based business tax deductions. And we're on to number 3 of the top 5, which is meals and entertainment. Now, we'll go back to number 1 was business use of your home. You calculate the square footage of your home, and basically whatever percentage of your home you're using for business, you can actually take that percentage as a tax deduction. So a percentage of your mortgage, a percentage of your utilities, a percentage of any maintenance that you have done on a house. For instance, if you put new windows in a home, then a percentage of the cost of that new window installation is actually a tax deduction. All right. And number 2 was business use of your vehicle. If you have a personal vehicle that you put miles on for your home-based business, then you can deduct those miles at 57.5 cents per mile. Those deductions can actually add up. So today we're on meals and entertainment. All right, Uncle Sam is willing to pick up the tab for 50% of the meals and entertainment that you spend money on. If you're wooing a client, if you're having a business meeting with your team or your prospects, they will literally allow you to deduct 50% of the cost of those meals and that entertainment expenditure, as long as you keep good records and as long as it is a legitimate business function. All right, so a couple caveats that I want to mention as it relates to the meals and entertainment. When you're local, that means if you are in your city, in your town, and you're doing business meetings over a meal or at an entertainment venue, such as a golf course or what have you, then it's 50% of the cost of those meals. But if you are traveling, so for instance, if you are out of town attending a conference or something, then 100% of those meals are tax deductible. But just to give you a disclaimer, I am not a certified tax professional, accountant, or anything of that nature. So make sure you want to run this information by your tax professional so that you're making sure that you're using the strategy that best benefits your situation. Because what we know about the tax code and these tax laws is that they are situation specific. So there's certain strategies that you can employ depending on the situation. So meals and entertainment, if you are not taking advantage of these tax deductions, then you are literally leaving money on the table. All right. Another thing that I want to mention is it relates to closely related people. All right. So for instance, if I take my wife out to dinner, and even though she has her home-based business, I have mine, and we talk strategies. We're constantly talking about how to improve our business, how to make it more productive. There's a few more steps that you want to take if you want to make sure that you can claim the tax deductible for your meals when you're dealing with someone closely related like your spouse, because basically there's a fine line between personal and business, and you want to make sure that if it is a legitimate business meeting, that you do a few things to properly record it as such. So one of the things that we do is that we make sure that we put it on both of our calendars. So on her calendar it says business meeting with me, and on my calendar I say it's a business meeting with her. There's also an agenda that we'll type up, and it basically says what we plan to discuss at this business meeting, and then we schedule it out a week in advance. So we make sure that it is a legitimate tax deduction, none of the spur of the moment stuff, all we're together, let's just sit down and have a meal, and then all of a sudden try to turn that into a business tax deduction. That's not how the system works. We want to make sure that we teach you guys the strategies and how to use them legally, ethically, and morally, so that in the event that you were audited for some reason, you have documented proof to show that you have a legitimate claim to take that specific tax deduction. So when it comes to meals and entertainment with someone who's closely related, like a spouse, then there's a few extra steps that you want to go through to make sure you bulletproof yourself. Not to say that we don't want you to take those deductions, because like I said, when I sit down and have a meal with my wife at a restaurant, we're pretty much talking business the whole time, because we're both pretty passionate about our businesses, and we're excited about that, and we want to help each other make sure we're using all the strategies that we can to grow our individual businesses. So we definitely take those deductions, but we want to make sure that you are doing the right steps to make sure that you're audit proofing yourself. Because what are the three things that the IRS say that you must do in order to have, or in order to take advantage of these deductions? Number one, you have to be working your business on a regular and consistent basis, which we qualify for. Number two, you have to be working your business in an attempt to make a profit. Now, does it say you ever have to make a profit? No, but you have to be making a legitimate effort to make a profit. And number three, you have to keep good records. All right. So if you're not doing all three of those things, then basically you have a hobby, and hobbyists don't get to take tax deductions for their expenditures. So I just wanted to share this information with you. A lot of people wonder what it is that we do, how it is that we do it. If you do not have a home-based business already, and you're starting to understand some of these principles that we teach and how a home-based business can help you minimize your tax liability, in addition to helping you make some extra money, then go to www.financialhealthmentor.com and check out our 369 financial transformation, where we'll show you a strategy to transform your finances in 9 months or less. All right. So today's episode is brought to you by Financial Health Mentors 369 Financial Transformation, where we bring practical, proven wealth creation strategies to working class people. As always, the formula for success: thoughts plus actions multiplied by time will give you your results. So if you have the wrong thoughts, they'll lead to the wrong actions, and if you do those wrong actions long enough, you will get the wrong results. But on the flip side, the right thoughts leads to the right actions, and done long enough, you'll get the right results. So I'm the financial health mentor to the working class Cortez, and I'll see you in the next video. Peace out.